Hello, Mark Sturdy here with highlights of this week's research, week beginning 21st of June 2022. Let's look at the summary. And the one clear market we see for a strengthening dollar and weakening is the yen. The weakening yen continues. The trend is solid, well structured, and on its way. There's the long-term move since basically a weakening yen since the beginning of 2021. Throughout 2022, we have been weakening. There was a pause in May, and now we've pushed ahead over the previous high. It is an accelerating move. Here we have the short term since the beginning of June. We've paused, and bears of the yen should wait for a break of 135.58. Turning to stocks. We are now bearish of the S&P 500 and especially bearish of the Eurostoxx 50. Let's concentrate on the Eurostoxx 50, perhaps the most exciting chart. This is a monthly continuation chart, so we have to wait till the end of the month before the breakdown through these prior highs is unambiguous. We have bounced here before, from these levels before. You can see it traded right down here and closed above or in the middle of those supports. Again, it traded down and closed above, but this time we think the breakdown is real and lasting. And the reason for that is here in the weekly medium-term chart, we have a completed bear triangle. There was no such completed bear pattern in these breakdowns, so this is why we think this is an important and ongoing breakdown. This triangle, by simple measurement, suggests a move down to 3,000 minimum. Here's the day chart, shows the breakdown of the triangle in the September contract. Cautious bears might want to wait for a break of 34.29, the previous low. Others will already be short. Bonds. The highlights of the bond situation are as they were last week. We're bullish in yields in all markets. Let's just take an example, the US note. Here's the massive rise and acceleration in rise of yields in the US bonds. This is at a prior high in terms of yield, so a natural point in which the market might want to take stock, but there's no evidence the top formation has been formed yet. Here is in the weekly chart, the rise in yields. It is an accelerating rise in yields. It has pushed on ahead. It may yet consolidate around this level, but for the moment, there's no top to be called. In price terms, it's less acceleration and more of a pause. And any break up here might signal a bit of a retracement upwards in price terms, fall in yield terms, but it's not there yet. It's up against this resistance. Commodities. Oil has yet to prove itself able to break above the prior highs from 2009, 10, 11 of 115 to 110. The market's dithering beneath that level. If we look at the chart, there has been two main attempts here and here, unable to hold that level above 113. Looked at in more detail in the July contract, the market did break up 116.43. Last week we were rather excited by that, but the week before last week though, the price action is distinctly unimpressive. Not only has the market pulled back through the prior high support, that should have been good support, that prior high. But it's also, in so doing, it has formed a weekly key reversal. Those are two pieces of good bear evidence. The market's dithering on this diagonal here. Cautious bears might want to wait for a break of that or a break of 107.97. Others will already be short because of that weekly key reversal. In any event, it looks very vulnerable. Gold is dull, dithering between resistance up here and support down here. Thanks very much.